So this is the second part of the event, guys. Thank you very much for your time. Vlad, the floor is yours.
Thank you. All right. Well, thank you, Ziad, once again, and thank you, Financial Policy Council, for letting us have this event. And I know that this is the final event in the year, which is also, it's actually quite amazing. So what I'll try to do is I'll try to make it more entertaining or more interactive. So I'll tell you a little bit about mBank and how mBank came to be, especially as it pertains to our as-a-service portfolio. So as most of you know, we started off as a technology company some time ago, about 5 or 6 years ago now, actually 6 years. So and people who started it with me, including Lars, they've been obviously with mBank since day one. In our past career, we've realized that it's actually very hard to set up and launch a financial institution. It's very expensive, the process is cumbersome, there's a lot of regulation involved, and it's very, very hard to be successful ultimately, and it requires a lot of money. So what we do now with most of our clients is we help stand up financial products and services by extending to them what we call an as-a-service portfolio. So banking as a service in our world has a slightly different definition that you would probably hear from everybody else, because look, banking as a service, what does it all mean, right? So there's a lot of terminology going around, like embedded finance and so on. So for us, banking as a service really start with only one thing, and most important thing, and that's compliance. So compliance as a service, and we've been discussing this also during the intermission. Compliance as a service is the key entry point into banking as a service, into standing up your own financial institution or your own financial products and services. Now, compliance also comes in many different flavors, and I'll talk a little bit about that, and then before we go into the panel discussion. Compliance comes in many different flavors, and the fact that we're able to offer the entire spectrum of compliance support, and we have 24 team members in our compliance department. This is something that is so hard to replicate, and this is something that none of our fintechs would be able to afford. You understand, right? So first and foremost, you have to get compliance buttoned down. And if you do not, you won't be able to operate your banking services. So when we started off with compliance as a service as the entry point into creating your own or building your own financial institution, we expanded our compliance portfolio into other things that are so boring that nobody wants to do, like dispute resolution. So we do dispute resolution as a service. We do complaints as a service. In fact, the volumes of complaints that we're handling a lot of volumes. No, I'm not pointing, I'm just saying there's a lot of volumes across all of our clients. This is something that even established financial institutions are struggling to do. Nobody wants to deal with complaints, right? There's no money to be made in complaints, but guess what? We actually make money on complaints. So we do everything that you wouldn't want to do, right? We're like janitors, in the back office. We do back office as a service. It's not interesting. But what we do, we enable all of our clients to be successful at the front end. So they're at the front of the products and services that we then support. And we support a very wide range of use cases. So imagine this. So we started off with compliance as a service as number one. Then we went into dispute resolution as a service. We went into back office as a service. We're now doing account closing as a service, because there's a lot of regulation involved there. And then there's always something missing in the portfolio. So unless you're able to deliver lending as a service, your portfolio is incomplete. And this is what makes us different, right? So in this whole scenario of banking as a service providers in the market, those who do not support lending as a service will find it very hard to survive, especially in the current market circumstances. So for us, it was a natural transition into lending as a service. So the first question we asked ourselves when going into lending as a service, how are we going to make money? Because we're not a bank, we don't want to get regulated, right? So if we start participating in interest income, then the regulator will come and knock on our door and say, hey, now you're a bank. And yet we found a way to navigate the complexities of the regulatory environment here in the United States to be able to manage the portfolio investment into loan portfolios of all of our clients to be able to stay unregulated at any point in time. Yes, we have a lot of lawyers. We have licensing attorney on speed dial, essentially, and there are weekends when we have to turn around legal work, right? And there's not a day goes past when we don't speak with an attorney, for whatever reason, right? But that means that you don't have to, right? So that's why when you start going into something which appears to be regulated, like lending, you have to have this legal backup and legal support that's only an established company like ours can do. Now, what does it cost to have all those attorneys, to have 24 people in compliance department? We know that even some of the mid-size financial institutions in the United States, they cannot afford that. And yes, we're getting business from regulated entities that also don't want to handle complaints. So I'd like to open up by asking the panelists here, what lending use case would you like mBank to support?
I'd like to ask you a couple.
Yeah, go ahead, Ziad. Yeah. Mm-hmm.
So you started the company with how much capital?
So when we started, this is how we got started, and it might be different to what you experienced in. We basically asked everybody who joined us back in 2016 when we got started to bring some money. So myself, Lars, Javier, who is here.
How much did you get?
So we got started with $500,000. I think that was the first money that we raised. Then we raised a little bit more, and then we raised a little bit more. But it was always like a fundraising experience. I don't want to call it game, but it was always, me as a CEO, all I would do would be fundraise.
You have 24 compliance officers.
Correct.
How many employees?
Out of 206.
Pretty much.
Yeah, but 24 front-end compliance officers, because you still have fraud analysts, so we have quite a dispersed team, and we can talk about that as well. We have people who enable our technology to be successful, because you cannot be successful in just relying on people. People ultimately are also a bottleneck, right? So we have people that work across the whole fintech ecosystem to make us successful. Just the most expensive department is compliance.
So how much revenue is derived from compliance?
I would say that most of our revenue derives from compliance. So
how come?
Because we charge our per account fees support compliance, exactly. So we do not, like, for example, our business model does not involve us charging for technology as far as banking as a service is concerned. So we charge basically for compliance.
So what percentage of your overall?
Overall, about 80%.
Wow.
Yeah. And the highest margin as well comes from compliance work.
And the rest comes from what?
Technology. So between technology and compliance.
Technology, you mean lending? Or
no, technology, banking technology, ledger, core banking, what have you.
Percentages from lending. Very.
So lending, like I said, technology itself enables lending.
Yeah.
But the more difficult entry point into lending is compliance, because lending is regulated. You see what I mean? So even with checking accounts and basically deposit products, you can get away with a basic sponsor bank. But when it comes to money, when lending money, then you have much more complexity. So that's why.
That's a very interesting niche you have.
Yeah.
Impregnable.
Yeah, and it's impossible to. Our clients should close their ears, but it's impossible to unwind. It's very hard to unwind, because like once we create portfolio financing on top of everything else, until the last dollar of the portfolio is repaid, or entire portfolio is purchased, we're almost guaranteed to retain relationships with our clients.
So they're gonna be all dependent on you. The more you grow.
Ziad,
I love it. Very smart.
We have a lot of clients here, so.
We love that.
Very smart. Very smart.
Go ahead.
How do these clients find you?
How do they find us? So we have three main channels, I would say. I think the biggest channel we have is through our partners. So our partners send business our way. Our one of our biggest channel partners for business is Galileo. Galileo, that's part of Galileo right now is part of SoFi. So there are certain business lines they had to exit to comply with their new regulated company structure, because now they're also a public company. So and we are lucky to have this relationship with them. So if you are a Galileo client, most likely you'll be using our services. And they're a massive provider. We have Terentev, our partners in this room. Steven, say hi. So they send clients. We work together with them there in the technology space. We're in the services space, so it's very complementary. And then we have a smaller portion of our clients that come through our personal connections, right, Lars, through opening up doors to specific use cases and best of breed innovators that we then try to find ourselves through our accelerator program. We have a very lucrative accelerator program, so we try to find best of breed innovators. Lars is on the airplane most of the time trying to interview and find best of breed innovators. We want to bring them on board. They give us a lot of energy. So, and that channel really is very close to our heart, because we ourselves, we're drivers of this innovation.
You're very often also the consultants helping those innovators finding the path to banking. They might have brilliant ideas, but complete different backgrounds. So we can help them to guide them through the process and navigate them to become a banker at the end, right?
It's like, imagine a situation, you have best of breed innovator or innovators, and it doesn't matter which industry that's in. It can be in marketplaces, it can be in solar technology, it can be in consumer finance or what have you. Oftentimes when they speak to a big bank, they almost speak a different language. So the bankers will never understand the technologists. So we act as this...
I mean, just with Eraj and with Rachel here, they've been already doing good as a company without having their own bank, but the portfolio completely changed with enabling them having the access to our own financial services environment. So.
That's correct. Without
mBank
support, without mBank support, we wouldn't have been able to embed the fintech component into our tech stack. And what that's really helped us do is, with our utility token, we needed somewhere to have a custodial account that could hold and be able to transfer among our user base any kind of those digital security assets that we've created. So the service that really benefits us is being able to use mBank as the provider for that and then create those exchanges.
So like you're becoming like the clearing house for
clearinghouse is one.
technology and compliance.
That's true. So ultimately, I think one of our aspirations and wildest dream, the wildest dream is that we wake up one morning and your bank and your bank and your bank, first of all, you're a bank, but everybody else settles on the mBank fabric.
That's what I'm saying.
There we go. Sorry. We support our clients. Most important for us is for them to be successful. When they are successful, because really we're subscription based, if you like. We're based on their success. If they're not successful, if there's no growth in their consumer base, then we're not growing, right? And now, basically, this new opportunity that has evolved, and it's evolved over time, is lending as a service. How can we, non-bank, provide ability to tap into not unlimited but very rich part of finance to be able to fund our clients' programs? You see what I mean? So it took us, I would say, about maybe 7 months just to get the regulatory framework and all the legal framework sorted out so that we are never perceived as a financial institution, because that would be a death of mBank. If the regulator comes and says you are now regulated, then it becomes very difficult for us. Having said that, we have the most amazing relationship with the regulator. Now, for us to be able to deliver the services we are delivering, we had to receive what is called notification of non-objection. So we have one from Washington State Department of Financial Institutions to operate banking as a service, and one from Federal Reserve Bank of San Francisco. Federal Reserve Bank of San Francisco also acts as a regulator for smaller banks on the West Coast. So to get something like this was a huge hurdle. There's the number of companies that are able to do this is so small, maybe one or two. I mean, to be honest, I don't know any other competitor that was able to get that at as early as we are at 5-6-year-old, as a 5 or 6-year-old company. So now we're able to navigate the complexity, be friendly with the regulator, tell them upfront what we are doing. We get audited as if we are a financial institution, but we are not. And we choose to be audited. We choose to be looked at like we are a financial institution. And with that, we give confidence to everybody in our value chain, starting from the regulator themselves, to a partner bank, and then to fintechs, and then to our fintechs consumers, that their money is not at risk, that we're not cowboys like FTX, that there's no hidden agenda, and we're not here to make a quick buck and disappear. So those who've been working with us, I hope, know by now that we're for real, and we want to stay, and we want to make the world a better place. All right. So is that okay now that we've asked questions? So let's talk about lending programs. So let's say Ziad's question. Let's say if you were given $100 million for your portfolio, how would you spend it? Sergio.
No, we would. Yeah, this also. Yeah.
I think probably the only one that works is that one.
That's the only one. Okay, left. Okay. Yeah, that's good. At least one. Yeah, no, we've been talking I think for a while, so there is no like a secret about. So our model is basically continue to provide extra cash to our customers. So that's and one of the products which we probably be doing pretty soon is the credit card. So that's an obvious extension of our early wage access. So that's a upscale of it's a graduating of certain cohorts of our customers. So those who less risky with the best financial behavior, and we want to provide them a regular credit card, and that's what we see huge demand in that. And and that's actually why the credit card also is important, because then, since we in our main product, so we don't do any credit reporting, which I talked about. So as we don't deal with the credit reporting system at all, the credit card would give them an ability to be reported. So at least that will give them an ability to also start building their credit. So if they so we feel it is also something important. And yeah, so answering the question is the credit card.
So it's almost like in the United States, you have to get credit to have
you need
credit.
To, yeah, as I say, you need to in US you need to buy your credit score. You don't really get your credit score, you buy it, right? So you need to get credit to pay.
And those who don't have it, hardworking Americans, right? They rely on check cashing services, or they're basically staying outside of the financial system. But most importantly, like what Sergio was saying, they display very positive behavior for the U.S. economy. They're just underbanked and underappreciated by the United States financial system.
Yep.
Rachel.
So we've got our more traditional solar loans and electric vehicle loans. We're also going to do credit cards, and we have some partners in our ecosystem that we're doing credit cards for them as well in the space. But what is especially important for us with mBank is that we want to do a new kind of solar loan that is collateralized by the solar energy that the home produces. And a more traditional bank would probably not get that. And these guys are tech savvy, and they're able to work with us on that. And then also our clean tech product, which is a microgrid optimizer, creates sort of like a virtual power plant, and because of our technology, we've partnered with CrowdPoint on that. We've exclusively licensed that technology from CrowdPoint, and that creates an opportunity for energy trading that can be futures and spot trading. And I think Eraj can.
Can I just ask a question? So you have solar energy as collateral for a loan?
Yes.
Now, how crazy is that, right? All right. game changer. Go ahead.
So what we were really excited about what value that Carbon Blanc was creating, and then being able to distribute the technology that we've built on the microgrid optimization aspect of it. It was really to be able to take something that has been in a space where most consumers get net zero metering, right? So you don't actually get any value for putting up a solar panel. There's no income that's being generated. Now what we are able to do with Carbon Blanc is take the energy that's produced, identify and quantify it, and then be able to either sell that peer-to-peer to your neighbor, sell it back to the energy grid, or take that out into the green bond market and then create entire kind of carbon offsets and create an entirely new asset class. At CrowdPoint, our core focus in business is to be able to create new asset classes using digital securities, and then being, whether that comes from identity, whether that comes from energy, whether that comes from real estate, be able to tokenize pretty much any kind of object that's out there. And we really needed a financial institution to help get that value for not only investors, but the end consumer that's out there using our platform.
Can I just ask a question about digital securities? Is it something that HSBC just announced that they will be involved in?
Yes, very similar. So a lot of the big banks are looking at being able to utilize digital securities as something for their high net worth individuals, for any other institutional investors, and the end goal for this is to have proprietary yield that is specific to whatever industry that they're looking at, create new wealth, and just continue to generate the edge that's not in the market anymore. We got to beat inflation, so how do you do that? It has to be created from something that's innovative and securitize a product that's not been thought of in the same way.
Yep, go ahead.
Can I assume that your businesses are growing organically and you really couldn't allocate $100 million to anything at this point in time because it would be a misallocation of dollars which you couldn't give a good return on?
You go ahead first.
Okay, on that, yes, because the businesses are growing, and with tech companies, it's not the same approach. You have to be able to look at where the innovation is going to come from, how you can improve the customer experience, and where are you generating value, especially when it comes from data. But we look at enterprise value overall as kind of the indicator.
So if offered $100 million, you wouldn't take it?
Tell him about your share price development over the last 3 years. Then he will give you 250 million. I don't know. 100 million.
Okay, so we've taken a regulated approach. We did, took our own medicine on this. Over the summer, we launched a hybrid utility token that is SEC filed. We filed that at 1/10 of a penny, so it was 0.001. In September, we launched our Reg CF using the same SEC mechanism, and we were able to increase our value to a penny. So within that short 2-3 months, we jumped from 100 million to $1 billion in valuation already in one product. That's excluding our data, that's excluding our tech stack, that is just the utility token. Our approach has been very much run to the regulator, make sure that they understand what we are doing. We're currently in process right now with the CFTC to get this filed and registered appropriately. That way there's use cases beyond just having it as an internal kind of mechanism.
Right now, the biggest shortage amongst the fintechs that we see, and we see a lot of fintechs, between myself, Lars, and others in this room, we see a lot of fintechs. The biggest challenge is to get access to reasonably priced liquidity so they can fund their lending programs. So because we act as a program administrator for those programs, we have the sense of security in the fact that they're our clients, that we support the entire back office. So that means that if something happens to Eraj, for example, forgive me, nothing is going to happen to you, but if something happens to any one of our clients, because we are their infrastructure, we can still continue supporting their clients. So we are much safer in distributing the $100 million portfolio financing to each of those fintechs' needs so that they can be successful, so that they can generate money, so that they send more compliance requests to us.
Okay, It's a fair question, fair answer. It's the first time I hear this answer. Before that, we were going around the bush.
Right. Well, but then the question is, so I understand with Rachel, for example, that's very clear cut, right? So Rachel's company wants to finance solar panels or solar industry, right? And the whole vertical is sometimes a bit opaque for banks because they don't fully understand it. So you need to have somebody who has the knowledge. In Sergio's case, you need to have the knowledge of the demographics and where their money is coming from and how to get it back to make sure that you control losses. With Eraj's case, it's also similar because Eraj's case, he supports the marketplaces. So funding marketplaces, for example, can create substantial return for his platform. You see what I mean? So everybody.
So you would take the money, invest it in your these clients,
Yes.
empower them,
Yes.
and have them even more dependent on you.
Exactly. So you understand, and the entire.
Said this.
Yes, there we go. So, and then the entire value chain, we put ourselves and bank on the map in the entire value chain because we are the ones that come from the source of money all the way to the end consumer.
But the more that you empower them to scale their platforms, and the more they're dependent on you, you're also putting them a little more at risk. So how do you manage that risk?
Oh, that's we're putting ourselves at risk or them at risk?
Them at risk.
Well, yeah, I mean, your client's more at risk.
So you think that by us giving more funding to them, we're putting them more at risk?
There's a little bit more of a delicate balance. I'm asking the question.
Oh, we're happy for them to.
If you borrow, if you lend $1 million, right, it's my problem.
Yeah.
If $10 million, it's your
Or
problem.
you,
Oh, I see.
you have no risk. If you loan them more, then it doesn't work. The scalability of what they're doing doesn't work.
So I mean, look, everybody has to be smart. I mean, there's no fast money nowadays. I think those periods are gone. So with Sergio, for example, he has a 4% loss ratio on the current programs that he's issued more than 100,000 loans, right? So over the whole,
Yeah, it was like it was 600,000.
Yeah, we go.
I don't think you put them more at risk. I'll tell you the scenario that I see. If you do that, they're going to be more dependent on you. If they fail and you put them more at risk, as you say, you buy them out for nothing.
We continue providing services to their consumers. So that's what I'm saying. So we.
You perform, I'm empowering you. You don't perform, I buy lock, stock, and barrel for cents.
And do what?
For nothing.
And do what?
Yeah.
Yeah, and do what?
Well, of course, that's why you don't fail.
You're stepping into totally different, business, total different model. So it's a consumer phase in our case. It's like we need to understand about risk, about how to get those.
Of course. I say I'm talking in general.
It's just leveraging the risk.
The case is different.
Total different business. Yeah.
In general, I like to.
It's about
I
leveraging
think
the
it's
risk.
it's a mutual dependence in this sense. So, but I mean, I think it's like any sort of dependence in any ecosystem. So we depend on many things. Living in a particular ecosystem. So I don't think there is any risk there.
It's not any different to any business relationship.
I agree. I agree with you what you said. I disagree with what she said.
No, I was posing the question. It wasn't really. Thank you.
So I think that the risk comes from loosening the compliance. So let's say, for example, if we say, hey, Sergio, do what you want with this money. Like I'm making this up. Well, you wouldn't, right? Because you come from, regulated industries yourself, right? So you're not the first. It's not your first rodeo, right? So, but what if this were to happen? I can tell you why it cannot happen, because we tell every one of our clients has to buy mBank's compliance as a service.
Yeah, that's right. You totally own them.
Ziad, you're being negative. Come on.
There's nothing negative if you own them.
No, but that's what I was getting at. You're providing the security.
Right.
But I will say this as a client, that I don't want to go out hire a compliance department. Right? I mean, it's a cost center.
The goal is to be the clearinghouse
Absolutely.
for every institution for compliance.
Correct.
There we go.
800-pound gorilla
Yeah.
for
So
compliance.
they've built their moat.
Thank
You
you.
have this and you get there, you own everything. You control that one, that is not the right word, but you know what I mean.
We control the ecosystem in a way, yeah.
Exactly.
So, and that's why the whole ecosystem needs to stay compliant. The whole value chain needs to stay compliant at any point in time. So if we bring compliance, we bring this transparency into the entire ecosystem, into the entire value chain.
So it's very easy. It starts with the KYC of the customer's onboarding. If B9 onboards a customer, they make a KYC on that specific customer. We're doing the same on top again, so we double check. Every customer onboarded on any of those clients, we double check. So we put our fingers on transaction monitoring, on the chains. We try to have this fraud management established in a way that we really hold each other's hand, not in one way, in two ways, right?
Well, there is a dispute resolution on chargebacks or whatever. So that's where normally mBank is stepping into more actively.
Yeah, imagine for example, we manage a lot of disputes. Just since February, it was almost 6,000. 6,000 disputes. You got it? And nobody wants to do it. If anybody here is from a traditional bank, would you want to handle your own disputes? See? So, and we do 6,000 of them. Yeah.
This is great. This is what marks a great event. When people listen to this and get out of the room after 2-3 hours, understanding your business better than any article they're going to read or write down. This is exactly the value that we as FPC provide by bringing people like you and your team really to explain and flush out everything. That's value.
Thank you, I appreciate it.
Appreciate it, thanks.
Seriously. I bet you everyone in the audience right now realizes and understands about fintech much more than before the event.
Mm-hmm.
How you make money, how you create the value, how you scale, how you deal with your clients, and this compliance thing, it's monopolistic.
Don't say this to the regulator.
Who does this from the fintech folks out there like you're doing in the compliance?
In a compliance space, so there are many fintechs that do bits and pieces, but nobody really does the entire value chain, so no.
Well, we both have a background, right? We've been in Big Four as a partner before, so we've been growing up and raised with compliance and regulatory. That was for us always the underlying baseline. So whatever we do, we have to be waterproof, bottle-proof.
Bravo.
Well, thank you for having us. So let's open it up to questions. Ziad,
We asked a lot of questions already.
yeah. Oh, okay. Well, we're happy to fold soon.
Alex.
The other time, so what do you ate? The other time?
Okay, I can see. Hold on. I think they were first. Let's do that.
Alex.
Go ahead.
I'm just curious. I want to go back to the loan question, because there's two ways to look at how you as a bank grow and scale, right? One is you get down to the granular level, verifying every loan within the portfolio of your client's pool.
Right.
There's sort of that final tertiary layer, but part of that comes understanding each unique business model. You sell renewable energy credits, or solar energy credits, or sell utility, water toll. Pick up gamut, and it's unique to each industry.
Yeah.
Does that mean you gotta know and understand, and inherently as mBank, know all the intricacies and risks associated, or at some point you punt that level of risk management, let's call it, on your client as a right?
Well,
where do you draw that line? Does it make sense?
Yeah, no, I really.
That's also something we started from beginning on, where we said, even 6 years back, we said the future is non-bank banking, embedded banking. Put banking, financial services processes anywhere in a niche product, right? It can be just a classical retail niche of a banking, but it can also be the kind of asset which is unique in the market, which looks for financial service in any kind of way, right? So obviously, we look very carefully in those risks. Whenever we assess new clients, we discuss the case, and those ones here have been kind of no-brainers, and there was more like classical ones of B9. But all over, I could write a book about it, right? I've seen so many cases, and it's really surprising what people come up with. It's really genius sometimes. There's a lot of things on the way we cannot talk about here, but there come really phenomenal new way of banking. And I just said it to you in the break. The world looked different 100 years ago with banking, right? It looks different in 100 years from now. So the banking product will change, the market change, the requirement for financial services change. And I think we're right now in this transition part of it.
Yeah, so if you look, for example, if you look even, let's say, at Sergio's use case, right, there is a lot of data. They've collected so much data to support their investment decisions or their lending decisions, right? And then, because they cannot lie about it, right, because we can see it, because we are processing all of it, right? We're processing their complaints. You see what I mean? So we're processing chargebacks, we're processing everything. So there's just nothing that we wouldn't know about the nature of risk that exists or resides within B9. And then if they're able to indemnify us because they understand their sector, we then in turn indemnify the partner bank, we indemnify the funding source, right? And it's all based on the fact that we understand their business, but they understand their niche much better than we will ever understand it.
And we understand that.
At some point, the ultimate client will have better knowledge of the market, right?
They have.
Yeah. And we have the gross leverage of the risk amongst it. So we learn from B9, which might be some fraud ID, whatever someone had, which we can make applicable then to Growpoint, right? So we can cross leverage and react much faster on any kind of threat.
Mm-hmm.
But I remember in our case, at least, we've been discussing like the business model, right, at the onboarding, like when we were just at the very initial, at the very beginning, right? So you were looking into like the business model itself. Trying to understand, maybe not in all details, you're right, but I mean, it
wasn't details enough. So what we do with everybody who comes our way, we need to prepare a specific use case for sponsorship by our partner bank. And no, we don't leave any stone unturned, so it starts from background checks on everybody. Where is their money coming from? Can they really do what they can do? So, and we don't, there are no shortcuts there. And then we need to see, have they been successful in the past or have they failed in the past? Doesn't matter. But have they been in the industry long enough to be those movers and shakers that we can then associate our name with? Because if any one of them fails, it makes us fail. So we don't want that. Right. So yeah, we've discussed, like your guys' business model, we've discussed from the beginning. We've created a financial model of what is it going to look like years from now, right? And look, you've superseded your own expectations. So how crazy is that?
It's actually a value add. They're getting more out of it than everything else.
Stefan.
Question. How do you all market yourselves? I've heard so far is pretty much word of mouth. I haven't heard anything about social media, television, direct mail. So how do you market yourself? That's the first question. And the second part of that question is, what do you look for when you want to add to your clients who are using your services? How do you go about getting them, and what should a person have to approach?
Thank you. So 2 questions, right? So let me start and then I'll pass it over to Lars. So personally, I believe that if you just market to a wide audience or go broadband, it's very likely that you will get a lot of opportunities, but they might not be what you're looking for, or they might not be there to really drive your success. So we go literally by recommendation. It needs to come through our partners. We don't really deal with walk-in customers. So most of our relationships came through one way or another. That's one channel. Another is our labs. So we have an accelerator program called mBank Labs. So that's where we really go broadband. We're saying, hey, do you have a use case in mind that you might want to have some investment for, or are you able to present yourself well to investors? Can we mentor you and see, how far you can go? At that point in time, we also assess, are they going to be a good client for us? Is it a fit? So, and now we have a number of our clients today are also members of our accelerator program. But I work more on creating the financial stability for the organization, whereas Lars works more on this broadband. So maybe we'll ask him.
Well, I'm on creating the client stories, and obviously we have something called the FinTech Estimator, where we just ask a couple of questions, and actually it's a tool to get in touch to new clients, to create a funnel. A couple of them really come out of there where we can see they have the right aspiration and the right ideas behind, right? So, but other than that, it's what Vlad says, right? And then we really sit together with them and create the story together. So we sometimes even, then we make the brainstorming, we make the sparring partner for our clients. We create the ideas what they can do when they have their own bank on top of their business ID, right? And we really try to, even now I've been together with this business partner 2 days ago in Miami, where we've been spinning around the heads, and now together with Eraj yesterday. So really, the journey goes on, even when once they're live, we don't let them go. We be part of it. And then we connect other products on top of it. For example, CrowdPoint operates the fastest blockchain in the market. The Oregon blockchain is their own proprietary solution. 1.5 million transactions per second, which is on the blockchain kind of next 5 generations above, right? So we will offer now from next year on blockchain as a service that any other client which has an NFT product to bundle up with their product can use this rail. So really we connect then the ideas together, right? Connect the dots. We have everything in the portfolio. Why should we not play with it?
Yeah, there's an expression I use, just one thing, the expression I use, you keep relationships in one place and money in the family, right?
That's
so you understand, right? So we always make sure that all of us, anybody who joins the mBank family, and they join as being a partner investor, they join as a client, so that we always support them. We support them through the difficult times. We support them in good times. We give them access to cash. We give them access to channels, and then we try to leverage each other to actually build even stronger use case.
Yeah, the first sentence in the company vision is, we are befriend with our clients. And if you have friends at home, you eventually invite them together, and then they become friends. You don't even know what they're doing together. And that's what we do, right? And it goes so far that even we had a couple of employees, developers in the country of Ukraine. Then we had people here in Vietnam which helped them to move with the families to Mexico. So it goes much above the business relationship.
How many clients do you have now, roughly?
Well, roughly I can tell you 76.
It's a very personal relationship.
Yeah.
I love it. As long as it stays this way, and the client does not become a number, like with the banks, unless you're super high net worth.
Yeah.
You're a number.
I think some of our clients will probably say, "Oh my God, guys, you're so hard to get hold of," which is true, because we're coming to the point where we're trying to create better, like a family, of a big family, right? So the uncle that you can never reach, right? This is me. Sorry, a question then. Go ahead.
Yeah, conversations in the intermission with Fred and with Sergio. It seems to me, I mean, what you've done is very brilliantly, and I'm probably saying things you already know, but you've reduced the barriers to entry to banking so that smaller players can apply, which is the same thing that a normal deregulation would do. And you get thousands of innovators because they can get in there, they can innovate, and then they can grow their companies. Well, the end point of a deregulation is the industry starts to consolidate. So if you project out 10 years, how many of these guys are going to be bought out for $1 billion by the likes of Citibank and Wells Fargo that are looking for the demographics that these guys have served so brilliantly?
That's a good question, Lars. Go ahead.
Well, I want to answer this because I talk to companies like this, and I'm sure that will not happen because they have their heart in the place that they don't want to sell it to a big one. I hardly see someone with an exit strategy, right? And the second thing is, I think the big one lost the game a long time ago. They have meetings with 20 people in the room. They have meetings with 2 people in the call, not in the room, and they make a decision. The other one takes 8 weeks to take a decision. So I think we see the other way around. I see the small ones taking over the big ones.
At what price you would sell the company? What's your price?
So since when we got started, well, hold on. So most of our employees are shareholders. So we're employee owned. So for us,
employees own what percentage?
More than 50% is owned by employees. Yeah.
You're also smart.
Yeah. Well, so.
And the rest is owned by who? By clients?
By partners. Terentev is our investor. So.
And the rest is owned by how many investors?
A small number. Yeah, a handful. So we don't have any VCs. We don't have anybody who is random. We don't have any random investors, which is so great.
Friendly investors.
Yes, friends and family, and Temenis, who is also friends and family.
And employees.
Yeah. So that's why if you ask me, so my heart is with the business as always, and my brain is always with the mBank family. So what would benefit them more at this point in time, that we exit or that we continue? You see, this is always my brain, you understand. And also to Lars's point, like at some point you realize, oh my God, you're sitting on a golden goose, so maybe you continue, who knows? So
I thought the question was regarding our clients.
And as far as clients are concerned, we wouldn't, of course, they're all entrepreneurs, but we would encourage to create value through what we are providing to them. So if they are valued, or if they can fundraise at higher valuation, yes, some of them will be acquired, right? It's if you have so many clients, some of them will at some point get acquired.
Okay, let me ask you a question.
Yeah.
What mistakes have you done so far?
Mistakes?
Whether strategic or tactical mistakes?
Well, Lars can
I get it.
Lars is responsible for mistakes.
No, he was going to tell which mistakes I made.
I'll tell you why I'm asking this question, which leads to another question. So, let's assume you decide to sell, because you have somebody who came and paid for you $2 billion, not 5%. I want to buy the business, whatever. You're still young. You still are very close to your
Compliment.
No, it's true. You were relatively, you're not a kid. And you said, so what? I take $2 billion and I will restart the business. What have you learned from the mistakes you've done? In mBank, to restore the business, if the check is very good, you're still at the prime age, you said, I want to restart the business again. These are the questions I always think about. I own a number of businesses, shares, etc. So I look at that.
So let me start with
And don't tell me you never made any mistake.
I've made tons of on a daily.
Of course.
I will just tell you, there's one thing that I would not change at all, is being employee owned. Because when you bring like-minded individuals, exactly, and then you tell them, hey, do you like our idea? Then bring money. How much can you afford? Bring your friends, bring your family, bring your money. And then, do we ever need to incentivize anyone, right?
No.
Everybody is like-minded at the end of the day. Yeah. So this I would not change. I think
What would you change? What mistakes have you
So I think one thing that I personally believe that we could have done better, we embraced the partnership strategy too late. We could have done it earlier, I think, in certain ways. We wanted to be more proprietary, I guess, at the beginning, and then we realized at some point that we can never be this best-of-breed transaction monitoring tool. We realized that we couldn't be like best-of-breed onboarding platform. We cannot be this, that, or the other. So this realization came quite late in the at least to me, quite late in the process.
It's 5.5 years on the way now, right? So that wasn't that late.
Yeah.
But obviously it was the first years we started with the mindset of a technology company. But then we converted, it started after 2.5 years already, where we started putting the services on top.
Yeah.
But we right away had a global footprint. We right away started global. I think that was the key differentiator to many other companies. We had multiple cultures. We have multiple entities. We had the accelerator in Singapore in the first year. So it really helped us to gain the understanding about what the future brings about. So we've got a lot of young people inside with the startups in the accelerator, while we've been kind of seasoned understanding to stay also still when the wind is blowing strong, right? And what we really, I think, what I adore on my partner here is that he always said there's no plan B. Whatever happened, there's no plan B. And being a young company, 3 years on the market, the COVID crisis crashed. Well, we've been frozen too for a moment. That what happens now? What will happen to us, right? What happens to our employees? And yes, we have 200-something employees, but behind there we have, everyone has 2 or 3 family members. We have probably 4 or 5 people. So talk about 1,000 people, which are responsibility for. On top of it, to the 200, we have partners which have families built around us. Development partners for the mobile app front ends, which is outsourced, the only part we do, not ourselves. So, and then obviously all the partners for banking services. So the framework is big where we have responsibility, but there was never a plan B from Lounegov. He always said we pull it through. There was the entrepreneur which stand still, even if the wind is blowing really freezing cold like in New York 2 days ago.
Yeah, there's no plan B. I mean, that was our attitude, I guess, to start with. We could have done, I mean, so to answer, did it answer your question, or is there anything else?
Yeah.
Any questions?
You did a great job.
Well, you did a great job, and thank you for having us.
Thanks for having us. Appreciate it.
All right, thank you very much, everyone. Thank you very much.
Thanks, Ziad. Appreciate it. Thank you.